Perfect. Looks like it's getting started. And then for those of you that are joining us here on Zoom, go ahead and drop a message in the chat. Let us know where you're from. We want to hear it. We want to know. Once again, my name is Alex here from Horizon Trust Company. I have my coworkers, my good girlfriends. I have Kelsey and Chris. Welcome, ladies. How you guys doing?
Hi. Good.
We're good.
Lovely, lovely. It looks like the live stream has begun on YouTube. So we'll just give it a couple moments to let people jump on. Not too long, but we should be good here. Welcome, everyone. We got Ohio, Florida, San Diego, Colorado Springs, and we're all over the place. Love it. It's the advantage of being a nationwide company. You get to see all over. Always hearing, oh, Minnesota weather. Sorry, I'm just thinking about the weather. We're in Las Vegas here, so it's starting to get cold for Las Vegas temperatures, but I know for some of you, you're probably already experiencing snow and all this other colder weather, which props to you for living in that cold, but that is not our cold that we experience here. Ladies, I guess while we wait for everyone to kind of jump on, and before we get started, what's something that's kind of exciting that you have going on right now? I can start. I was like, I'll give you two a moment to think about that. I know it's interesting. So for me, the most exciting thing that's happening right now is actually my little niece. I was like, she turned one recently, and I haven't had a chance to really go see her. So I was grateful to be able to see her over Thanksgiving. So she's growing up so fast. The last time I saw her, she was crawling, and now she's walking. And I feel like the next time I see her, she's going to be running. So I feel like I'm nervous for her, but I'm also very excited to see her. But yeah, that's kind of what's exciting in my life right now. Which one of you wants to kind of take it over?
I'll go.
For sure.
I'm going to be seeing my family for Christmas. So I'm really excited for that because they're an ocean away in Hawaii. So it'll be nice to hang out and spend some time with them.
Mine's definitely Christmas related too. Just getting ready for the holiday. And then in the office, we're going to have a desk decorating contest, which I'm really excited about. I won last year. I mean, it wasn't first, but I won. And so I'm excited for that. I want to do it again. So holiday time is always a really good time of the year for me.
Absolutely. And that's a great point. We do love celebrating the holidays here at Horizon Trust, everyone. So just so you're aware, for Thanksgiving, we did a little potluck. It was very nice. Everyone brought in a dish that was really good. And we got to enjoy that and just be festive together with one another. So during this holiday season, we're always doing extra things. We're doing desk decorating contests. We play little games and stuff like that just to have a little bit of fun, to try and, relax a little bit during this stressful season that most people find very stressful even at their jobs. So it looks like our numbers kind of staggered on attendees. So we're going to go ahead and get started. As always, I am going to go ahead and start with a disclaimer that I do have to share. So Horizon Trust Company is a passive custodian, and as such, we only perform the duties of a custodian. Horizon Trust Company does not provide advice, sell investments, nor offer any tax or legal advice. What that means, everyone, is that here at Horizon Trust, we are, as it says, just a passive custodian. You are not able to hold your own assets in a retirement account. A licensed custodian must do that. So we are that licensed custodian that does hold your assets. And that's kind of what our role is. We make sure that you are staying compliant within IRS regulations, and that all of your assets and everything are being treated correctly and that are being processed correctly so that you don't experience any issues down the line. I understand that sometimes these circumstances may come up where you get frustrated dealing with an investment, and you're like, just get it done. It's like, we want to help you get it done. And that's kind of what these Q&As are for, because we want you to succeed. We just want to make sure you're doing it right so the IRS doesn't penalize you. So with that said, that little disclaimer, we'll go ahead and get started. I am starting to see questions in the chat, so we'll go ahead and get those started. Let's see here. And actually, just go ahead and drop your questions in the chat. We'll try to get through them as many as we can within the hour. We are here up until top of the hour, so 4 o'clock for us in the Pacific Coast, and wherever you are. I'm going to go ahead and actually start with Angie's question first. How does taking a personal loan from our STIRA work? Can we use that money for anything, such as personal use and not business use? Chris, do you want to kind of take this one?
Yeah, absolutely. So with the retirement accounts, it's really nice to have the option of taking a personal loan, but not all of the accounts have that ability to do that. It's just the 401k accounts that have the ability to take a personal loan. So when you take a personal loan from that 401k, you can use it for whatever you choose to. And the good thing about taking that loan is that you do have to pay it back, but you're going to set an interest rate. And the interest rate that you set, the money that you're going to be receiving for the interest is going to go back into your account. So you're essentially making yourself money, which is really nice versus borrowing from a bank. You're paying them the interest and you get nothing for it. So that 401k loan is an amazing tool to have, and it's great to use and utilize for whatever you need to. But again, it's the 401ks are the only accounts that you have the ability to take that loan from. So a Roth account, a traditional IRA, unfortunately, there's no option for that to take personal funds.
So, and with that kind of taking a loan out of a 401k, what are kind of the requirements? So I can't do that out of a trad or a Roth. So Kelsey, what are those requirements that I need in order to qualify for a 401k to then take out that personal loan for myself and use it for whatever I want to use?
To qualify for a solo 401k, you typically are going to be a business owner or entrepreneur of some kind. You want to have either an LLC, a corporation, or a sole proprietorship. It does need to be generating active-based business, so it can't hold rental properties or be doing private money lending. It would be e-commerce, private contracting work, something like that. You cannot have any W-2 based employees in it either, other than yourself and your spouse. And if you do, they have to work less than 1,000 hours in a calendar year. And then to really benefit from it, as a business owner, you would preferably want to start paying yourself some type of salary from the company, some type of taxable income. That way you're able to make contributions to the account as well.
Perfect. Let's see. It looks like there's a couple follow-up questions on that from other individuals. So it looks like, how about just taking a small to medium disbursements? Mark asked on that one. So Chris, yeah, sorry.
Well, when I think of a disbursement, is that a distribution? Are you taking it for personal funds? So I guess the question to me of how I'm thinking of it is, if you don't have a 401k account and like you have a traditional or Roth account, how are you able to take money out? And that would be to do a personal distribution. And you can take a distribution at any time. The only thing is there may or may not be a penalty depending on how early you take out your funds. And then depending on the type of account that you have, it would be taxed, or it may not be. If it's a Roth account, it's already previously taxed. So we wouldn't require an additional tax taken from it. So at any time, any of these accounts can definitely take a distribution.
Yeah, absolutely. One of that first question that I kind of skipped over, it was just a little bit longer, so I just wanted to read it and make sure I understood it too. I'm going to kind of summarize the question a little bit. And Stephen Fecketti, go ahead and give us a call. Not right now, obviously, stay on the webinar and kind of help make sure you're listening to all these other questions that we're answering, but definitely give us a call and speak with our compliance team about that. For the most part, you're asking about using a EIN number versus a social security number for your investments and that type of stuff. So because the IRA plan is owned by you, your social is what's pretty much going to be used as that number in any investment. The only time where Horizon Trust EIN number, or actually, let me back up a little bit. If your investment is from Horizon Trust, your trust account, or whether it's your Roth, Trad, 401k, whatever the case may be, then invest into a checkbook LLC. So that's an LLC that you have established that is owned by your account. Then you would use that LLC's EIN number. So you would no longer use your social, you would use your LLC's EIN number for whatever investment you're making. But if you're doing it directly from your account here at Horizon Trust, the only time Horizon Trust EIN number would kind of go into play for an investment would be if that investment is generating a K-9 tax form. So the investment company will let you know if a K9 is being generated. And when that is done, you would provide us with that information, and we can provide you with that information for you to provide to them and get that taken care of. But your question is very specific, and unfortunately, we didn't have our compliance person here, Carrie, today. So we're going to do our very best without him, but your question was a very good question, and I know that we do get that question quite often from a lot of clients, so I didn't want to skip it, but I did want to mention those individuals. So just go ahead and give us a call, and we can definitely walk through any more specific details about your question.
I'll just add to that just slightly, because it is very unique. It doesn't apply to everybody with the EIN number. And I did see the message in here, and it's asking specifically about like UBIT or unrelated business tax, that kind of thing, having an EIN for that. Just know that you can go and create an EIN for your account if you're going to be getting UBIT taxes. It's not something that we have direct information for, because we don't know if we're not tax advisors, and we can't give you a lot of information for that. We can kind of give you the base level of information. And that is what Alex was saying. Speak to our compliance department. Carrie will have more information on that with helping you with it. But in the end, it's probably going to be a question for like your tax advisor, CPA. And any other time that it's asking for a different EIN versus your social security number, again, it's for documentations for investments that will generate a K1 for partnership.
Thanks, Chris. No, that's definitely great points. And I did say K9, didn't I?
You did.
I'm thinking about
I wasn't
dogs
going to
right now.
interrupt you though, and I was like, let me just add a little extra in there. Just
Perfect. So it generates a K1. Sorry,
K1.
apparently I was thinking about dogs right now with a K9. So some of the questions I'm seeing here, it's related to investing into real estate through your IRA. So Scott has a solo 401k with the trust. So I'm assuming here at Horizon Trust. He wants to know if he can invest into a rental house. Absolutely, Scott. So that's definitely something that you're able to do. Based on how you're going to invest in that, that's definitely going to be changing the way the investment looks. Are you just going to be the lender on a house to a real estate agent? Are you buying the house entirely? If so, you're going to pretty much go through a sale process like you would if you personally were buying a house, but the owner would be your IRA. If you don't have enough money in your 401k, to make that investment, do you then take out a personal loan for that? You're able to take out a loan from your 401k or utilizing your 401k, but it's a special type of loan, isn't it, Chris?
Right. It's called a non-recourse loan. So yeah, there's not all banks have what's called non-recourse loans, but it's specifically for investments directly through like your retirement account. It's just so if for some reason you weren't able to finish paying for this property through your 401k, the bank cannot go after you personally. They can only go after your account, and they stop there. So that non-recourse loan it's helpful kind of for both, right? For the mortgage company and then for you. You won't personally get in trouble for it or have consequences outside of not paying out of your 401k, which is nice. But we actually on our website, we have some companies that are on there. If you ever wanted to go onto our investment corner, there are companies listed that are that can be used for that non-recourse loan in case you ever wanted to have more information on that. But the non-recourse loan is required only if you don't have enough cash within the account and you want to finance or mortgage the property.
Yeah, so like Chris mentioned, she brought up that great point on the non-recourse lenders. We do have our investment corner available exclusively to our clients. So you would just go to our website, horizontrust.com. If any of you have been with us for a while, that you should have received an email. If you're a newer client, that's part of your welcome email that you get once your account is being established and set up with a password to that investment corner. I am tripping over my words right now. So you're able to go into the investment corner. It is password protected. So if you don't have the password and you are an existing Horizon Trust client, just feel free to email us, give us a call. We're more than happy to provide that information to you and get you set up. So that way you can find that non-recourse lender or that next investment to get you going to the next step. Moving right along here, Shelly asked, Can I use my SD 401k to invest into an investment group that purchases commercial real estate?
Yeah, you definitely can. You'd essentially be getting involved in either a PPM, a syndication, private money lending to them as a note. There's various ways to do it, and it's very popular.
Rebecca is asking, once your account is funded, do you set up a separate bank account for the various expenses as you would if you have an LLC for real estate? So for that one, Rebecca, if you're making your investment directly from your account here at Horizon, then no, we have what's called a bill pay request form. So whatever expenses you're incurring, you would just submit that form and then we would pay it directly from your account. We can send the money out via check, wire, or ACH. It is our normal 2-day processing time, but an invoice of some sort is required. It could be electronic or any other method like that, and we're able to do that. The only thing that we're unable to pay is anything like with a credit card. So if something needs to be paid right away with a credit card, that's unfortunately something you're not able to do. So it's just check, wire, ACH for any expenses. Which for most instances, your investments, you're able to do those expenses. However, with an expense like that, we often see those related with real estate. So if you're trying to focus about it in real estate and you start your investment through an LLC that your account here owns, and then that LLC owns the real estate, then you would already have a bank account for that LLC, and because that's where we at Horizon sent the money to, that then allowed you to buy that property. So you can use that bank account. Any corrections there, Chris? I know I tripped over my words again. Apparently, it's not a hot day.
No, I don't. I don't think there's necessarily any corrections. No, because you're right. So if you invested into an asset, you now hold this asset within your account, and expenses come about. You provide us with that bill pay request form. You send it in with a copy of the invoice. We then will review it and then make the payment directly from your account. So then we'll send it out by check, wire, ACH. So that's very, very straightforward with what it is. We always need documentation. And with the real estate, as you mentioned, a lot of times there's a lot more expenses. There's a lot of other things that will come up. And when there's a lot of expenses, saying like there's a water bill, there's the sewer bill, there's, I don't know, tax payments that need to be paid, those all will come directly to us with the bill pay request form and that invoice so we can pay it. But when it comes to a lot of clients end up wanting to handle them themselves. For the speed, they want to be able to make sure that they are keeping record of themselves. Then an LLC, an investment LLC held underneath your account may be a good idea, just because you would probably act as a manager or you would elect somebody else as the manager of this LLC. And then you have control over that bank account that's connected directly to the LLC. And this is what's called that checkbook control LLC, or we also call it an investment LLC. But you have the ability to write a check, to send a payment, and without having to send us the invoice, without having to send us the bill pay request form. So that is a lot of times the ease of being able to do it themselves is why a lot of clients end up creating an LLC to be held underneath their retirement account. So it just depends. It's not required that you have an LLC underneath your retirement account, just a matter of preference on how you like to handle your investments.
Absolutely. And we did take a deep dive into investment LLCs a while back. It wasn't necessarily us here on the Q&A. We get the questions a lot, but our owner and founder, Greg Herleen, along with our president, Steve Little, actually did an entire webinar just about LLCs. So that's actually available on YouTube for you guys to watch. So you can go to YouTube and just search Greg Herleen. It's one of his videos right there where you can learn specifically about LLCs, their benefits, their, and their downsides that maybe you haven't thought about, or maybe you're still wondering on whether that's what you want to do. Because like Chris said, you do have to be on top of it a little bit more, manage those investments and make sure that everything is in good order. So go ahead and check that video out if you are curious about LLCs. And then once you watch that, if you're interested, go ahead and book a call with our team. We're able to assist you in setting up that investment LLC and get you taken care of. If you don't have an account, you can also go ahead and do that as well. We'll have a link that I'll drop here momentarily in the chat, so that way anyone that's interested in booking a call with our team, you're able to do so.
Kelsey knows a lot about that, right, Kelsey?
You do, Chris.
The next question that we have here is from Lane. So he's looking to invest his Roth money into real estate. But as I was reading the question, it looks like he wants to be a private money lender for real estate agents. So he wants to know kind of what where to start and what that kind of cost is going to look like for him being the private money lender. So he's never going to actually buy the real estate himself. He just wants to lend money for fix and flippers and wholesalers and anything else like that. So Kelsey, kind of what cost might he, well, I guess both of you, what cost might Lane be seeing and what might be the best path for him to make that worth his while?
I mean, honestly, private money lending is extremely popular right now with how high loans are, getting them at financial institutions. A lot of people are looking for private equity, private capital. And so you'd be really good off in that investment type. As far as fees, it depends on, how much you're looking to transfer. Usually it's about 1%, and that's your annual, and it goes down from there, just depending on how much you have to transfer or roll over. But it's a simple process. At Horizon, with our fee schedule, we actually don't have any transactional fees. So to do this for yourself, you really wouldn't look at spending any miscellaneous fees throughout the year as you have wires, checks, or ACHs sent out or back into your account. So as far as ongoing fees, it would really just be based off of your market value and then a percentage of that. As far as miscellaneous fees, you wouldn't incur any. We have no asset holding fees and we have no transactional fees.
Yeah, so to answer as far as like the real estate section of it, I believe Alex mentioned something similar before, but with an investment, it's always, well, how do you want to structure your investment? And with real estate, there's so many different ways. If you wanted to do private money lending, a lot of times it's just as simple as like a promissory note. You would be the lender, your account will be the lender, and then you would find the borrower who needs the funds, and then you would draft up that paperwork. So what is the interest? What will you be receiving for this loan that you're going to be setting? You'll put the maturity date listed on there as well. And it could be short term, it could be long term. And is this promissory note going to be secured by that same property? It can be, and it doesn't have to be. So, I mean, it just depends on what your situation will be and how you want to set it up. But that's usually the simplest way to go about it. But there's other ways of like a joint venture. That's become really popular. A lot of people wanting to do that. And they use that for the real estate transactions too. If it's something on a bigger scale, it could be like a PPM, but the first two are probably the most common options. And again, you just draft up the paperwork. You always provide us with the direction of investment form. That is a start. That's how we know that you want us to send money out based on this new investment that you have coming. And the good thing about the direction of investment form is there is a list of the most common investments, and it will even tell you what kind of documentation we'll need based on that investment. So you can provide us with that or whatever you have, and you send it in to us, and we'll always review it and check to see if there's anything else that's missing that we may ask for. We'll just communicate with you by phone, email, and let you know.
Speechless.
I was waiting for the recap. It didn't happen.
No, speechless. I was like, you both covered it excellently. Moving on to the next question. I'm good. No further questions, Your Honor. Chris Coleman is asking that they have investments with Bitcoin IRA. So they want to close their Bitcoin account and just send that money elsewhere. So Chris, in order for that to happen, if you have an account with Horizon Trust, the money needs to come back to Horizon Trust. With any investment, regardless of whether it's Bitcoin, real estate, LLCs, whatever the case may be, any investments that you make through Horizon Trust, that money needs to flow in a linear path where it's from wherever it came to Horizon, then from Horizon to the investment, then from the investment back to Horizon, and then from Horizon to yourself, or wherever that may be. And that's just for reporting purposes. You don't anything other than that, the IRS starts looking at it, because just know that your account would still be active, and then you're going to tell us in a year or two when maybe your annual fee comes up, be like, why am I paying you guys? I closed my account years ago. And it's like, well, where'd the money go? So that's kind of one of those situations where you always want to make sure that money that at one point came through Horizon comes back through Horizon. If you made an investment and you lost money on the investment and you're selling off the entire asset, we have a deposit submission form that you're able to complete and check a box that says this payment pays off my asset, whether it's Bitcoin, a property, an LLC, whatever the case may be. If there's a loss, we might ask a couple more questions for compliance. But if not, we'll kind of see everything and be able to process it accordingly. If you're dispersing money personally from your checkbook LLC that you have here at Horizon, then you just move it somewhere else, then we're going to need to see that information. And that's where this time of year, fair market valuations is going to come into play. So we'll send an email out in the next month informing you about fair market valuations, that we need your account's current value because we are self-directed. So we're not trading stocks and bonds on a daily basis. So we're not actively reporting to the IRS. So that fair market valuation is going to be what we report. So that's just something to consider, Chris. If your account's still here with us at Horizon, just go ahead and give us a call. We can go over the specifics for your account and what that looks like. And we can definitely take a look at that. The next question I have here, sorry, I was focused on that one. Do you work with Canadian individuals that are investing in the US vehicles using their sheltered funds? Ooh, Chris, that's all you.
Well, I guess the question is, I mean, I read the question, but I think I'm a little confused on it still. It's saying, do you work with Canadian people investing into US vehicles? So is that a Canadian person who has an account or who wants to have an account? Or is it, do we have an investments outside of the country? Because I can answer the second portion of that, which is, do we work with investments out of the country? We absolutely do, as long as we can receive some documentation that's somewhat in line with what we need. So that I can give you a yes for. And then also, if it's going to be investing into vehicles, it also depends on how you use the vehicle, where the vehicle is going to be housed, things like that, because we want to make sure that we're not doing, you're not doing any type of prohibited transaction, which is driving the vehicle yourself, gassing it up, holding it in your home, like it's your residence, that kind of thing. So it kind of depends. So I would say vehicles as in like real estate transactions. With real estate, you can't live in that property. You can't do work on that property. You can't have your family members who are considered disqualified parties. So like lineal descent, also use it, drive it, do any of those kind of things with it, right? So vehicles are kind of similar to that. You can't do the same thing. You can't house it at your location, things like that. If it's a US vehicle, yes, if you're going to use it for like Turo, or things like that, yes, it's a possibility, but we have to kind of have more of the specifics on there. So I want to say I may have answered the question, but I also feel like I may not have.
Yeah, and that's definitely one of the ones that's a little bit more complicated and specific just because of the way it is. So for those types of questions, those are definitely better to be on a call with our team. We're able to go over and ask you questions that are more specific for your deal. So like Chris mentioned, is this for yourself? Is this with a partner that they're going to handle everything? Are you then going to put it like on Turo or something? So all of those are specific questions that we'll ask you to try and get more information to get those details.
I will kind of throw it back over to Kelsey just for a little bit. If I can Canadians have an account with us? I mean, because that may have hit the first question that I was that I wasn't sure if that's where it was leading to. So can we?
No, we can't. It has to be US based.
And why does it have to be US based?
Because it needs to be the United States retirement plans. So 401ks, IRAs, those are all US based.
Gotcha. Okay. So for that, you just need to have a social security number in order to open an account?
Yeah. You need to have a social security number and ITIN. Aside from that, you would just have to be employed by, so if like the company was based in the US, that would qualify you too, even if you're working internationally. So as long as the plan is US based, then yes, you can.
Hopefully we covered everything with that question.
Right.
Yeah, Gus, if you still have any more questions, again, just book a call with our team or give us a call. We're more than happy to go over it in more detail. Let's see here. The next question, Dolores has a self-directed IRA with us here, and she wants to withdraw $25,000 to use as a down payment on a home purchase. She plans to flip the home afterwards. So for that instance, Chris, how would that kind of look?
Well, anytime someone uses the word withdraw, I assume it's going to be a distribution. And if it's a distribution, going back to what we stated before, you can always take out money out of your account at any time. So that's not a problem. And if you're using your own personal money, because now it's your personal money, you can use it for whatever you choose to. So yeah, it's not a problem. You can definitely flip it and do whatever you need to. However, just know that that property that you're purchasing is not going to be held underneath your account. It's going to be owned by you personally. So that is going to be a completely separate investment. So I would say if it's going to be a withdrawal or a distribution, you own it, then you would own that property. But if you wanted to buy a property under the account, under your retirement account, then you can most definitely do so. You start off with the direction of investment form and then the documentation to show that the owner or the buyer of that property is going to be your account. So that's how you would make the investment and keep it under that tax-free status for now under your account. I think it's more of just the verbiage of that question. So I want to make sure that I kind of hit both sides just in case. But if you're going to be purchasing that property underneath your retirement account, you can still flip it technically, right? You're the owner, or the IRA is the owner of that property. You can hold on to it for however long. You can do some rehab on that if you needed to, of course, as well. And then you could sell it and make more money. Obviously, that's probably the goal to make the money using your retirement account. So you can still do that option as well.
Yeah, absolutely. But then at that point, you're kind of losing that tax advantage of having a self-directed account, being able to invest into real estate. It's pretty much depending on what you're trying to do, Dolores, that's what you want to look at specifically. And I try to scroll down as we're talking on the question, just in case there's a follow-up or anything, and I don't see one. But yeah, we can definitely go over if that answer wasn't very clear, or if there was just a part of it that you just need a little bit more clarification on. Again, just book a call with our team, and we're happy to talk to you about it. Wes is asking about 401k loans. So we love 401k loans. It's something that only 401ks are able to do. So he wants to take a loan for $50K, and he provided an amortization schedule, 5 years, 9.5% interest rate. So he's kind of created everything. His question is around the payment itself, back to the 401k. He wants to know if he can only do interest payments to keep the payment lower, and then at the end of the term, pay back the full $50K principal. Is that something he can do, Chris?
It's not, unfortunately. And it's based on what the IRS actually says. There is what they have in their regulations for the 401k is they want both interest and principal payments to be made either monthly or quarterly. So unfortunately, we wouldn't be able to defer the principal payment towards the end. So you kind of have to just play with the numbers and kind of see what will be best for you. And when clients ask about a 401k loan, I always say take something that is reasonable for you that you can pay back, because the result of you not being able to pay it back means that you would default on the loan, and defaulting on that loan means that you will then take ownership of the balance that was previously owed, that's owed on that loan, and you can pay taxes on those. So it's probably best to, if you don't think that those monthly payments are manageable, reduce the amount that you're asking for. But there's not much that we can play with. You can kind of play with the interest rate and see what works best for you. That will probably be the only way that you can kind of reduce that payment down.
Yeah. And kind of on another point there, I guess to add to that and to just keep in mind when you are preparing to take out a 401k loan is once you've submitted your loan documents and they're approved by our team, because we do review everything just to make sure everything is in good order. Once everything has been reviewed and your loan is sent out to you, your loan is pretty much set. Your due date is set, your interest rate is set, and the amount you took is set. So that's pretty much all locked in for the remainder of the period. So if you miss a payment, you have to make that payment up, whether it's over the course of the following months or at the end, whatever that case may be. So you just want to make sure that you're able to afford that monthly payment, because
And like you said, we can't extend the time frame. 5 years is the maximum. So if for some reason you do miss that payment, and as Alex said, you're putting that payment towards the back, you're not pushing it a month or two later. That just means you're doubling up on a payment somewhere in between there.
Yeah. So if I took a 401k today, November 30th, 2023, my loan would be due in full for 5 years on November 30th, 2028. So I can't add any more months. My last payment can't, if I miss a payment, it can't be in December of 2028. It would have to be November of 2028. So that's just what you always want to kind of keep in mind. And we kind of assist you with that as well. So with your forms. Sonia is asking, can you buy a rental property that is owned by your SDIRA? Absolutely. That is absolutely something you're able to do. That's the advantages of a self-directed IRA, that you're able to invest into those alternative assets, whether it's real estate, precious metals, private money lending that is backed by property or whatever other asset is backing it or protecting it. You're able to do that. So that's the difference between us and maybe another custodian that just has your traditional stocks and bonds. So you have hard assets, tangible assets, as Greg likes to say, something you can feel, something you can put your hands on. Not physically, because if it is a rental property, you can't do any work in it, but it's there. It exists in the world.
Self-directed humor.
I did want to clarify, she was saying, can you buy a rental property owned by you in a self-directed IRA? So if that's the question, then no, you can't buy a property that you own, a rental property you have existing from your IRA if it's already owned by you.
Ooh, good point.
Great point. Great catch, Kelsey. Thank you.
That one word made a big difference.
It does. You're right.
It really does. And it's those little things that we will catch when we're reviewing your paperwork, when you're trying to make an investment. It's Chris's department. They're the ones that review those transactions and make sure all of your documents are in good order. And she'll look over that and catch that and then she's like, oh, wait, what's going on here? And she'll give you a call, ask more questions. So
yeah, I want to go into just a little bit of the, I guess, why you can't purchase a property under your IRA that you own, that you own outside of it. And the IRS set rules on who they consider a disqualified person or party. So it's lineal descent. So think of your grandparents, your parents, you, your spouse, your children, and your grandchildren, anyone lineal, right? Even though okay, so let's start with you yourself. If you own this property, that is, that's you personally, right? You yourself will be considered a disqualified party. If your husband owns this property, he's disqualified. But what if you guys own an LLC outside of this? You own your LLC, so that also is considered disqualified. So you can't purchase from your own entity and put it into this. So that's the reason why you would not be able to do that.
Sorry, I scrolled down just because I wanted to make sure there wasn't any follow-up from Sonia, and I saw some things from Wes. One of his comments I'm not allowed to say on the recording, but you guys can definitely take a look if you want to check it out. The other ones, he's like, can I go lower than 9.5%? I was told payments back then that it needed to be prime plus 2. So, Chris, do you want to kind of elaborate on that prime plus 2?
So typically it is prime, right? Prime has been on the high end lately. So a lot of people with the whole housing market, the interest rates are a lot higher. But with this being a solo 401k, technically you have the ability to set your own interest rate. We give you kind of a guideline of where it should be. So prime is usually where we start, prime rate. You can always look that up, just Google it and find out what the prime rate currently is. And as I mentioned before, when it comes to your interest rate, you're getting the money back into your account. So you're technically benefiting in the long run, which is really nice. But if you wanted to go lower than 9% or prime, then you can. There is the ability to do so. But again, it goes back into pick something that you are comfortable with, pick something that you can pay back within that course of the up to 5 years. So it is your choice on what percentage that you choose. However, if we see something 20%, we may call you and say, hey, do you want to reevaluate this? That's high. But then again, if you put 0, we're going to also call you and say, unfortunately, that's not an option. 0% cannot be done. You have to make interest. This is technically an investment. This is a benefit for you. You have to make something back. So we do have some thresholds that we have to hit as a minimum. But as far as going above that, you're fine to do so. You're definitely able to do that. But 9% is not the lowest. You can definitely go lower if you choose to. And prime is more of a guideline and not necessarily the starting point.
I wanted to kind of take a quick moment from the questions. There are a lot of questions here in the chat. So unfortunately, I know that we're not going to be able to get to all these questions, everyone. So if we don't get to your questions, I do apologize. Just go ahead, give us a call. We're more than happy to talk to you and kind of get these questions situated. Unfortunately, by the time that this webinar does end, our business hours are closed for the day, but you can definitely call us tomorrow and we're more than happy to assist. If you're on the Zoom webinar and you're watching us, you can probably see text ask to 505-636-3730. That's so that you can kind of get a text message from our system and it'll let you book a call with our team. And so that way, if you're an existing client or you're a new client that wants to open a self-directed account, you can get that information. If you are a new client that's looking to open an account with us, we're actually running a promotion right now where it's through the end of the year where you buy one and then you get one for your child. And this doesn't actually just happen for new clients. It's for existing clients as well. Unfortunately, you do have to open a new IRA, 401k to qualify for this deal, but you can open an account for your child so you can start investing in your child's future. It's a benefit for them to have maybe like a Roth IRA where you're putting post-tax money into your child's financial future. So when that money is taken out by them in the future, that money already comes out tax-free because you paid the taxes on the seed and not on the crop. I've been hearing that one a lot recently, seed and crop. So I like it. It's a very good point. I was like, one small seed gives you an abundance of a crop, and that's going to be a great financial investment in your child's future with a Roth IRA. But you can definitely book a call with our team. They'll be able to go over the specifics with you if you do already have an account with us. And if you don't have an account with us, now's your time.
There was a question in the chat, and it says, do the 3 of us have self-directed IRAs? And I'll tell you right now, I do.
We do, actually.
And I'm using it. I'm definitely investing. So absolutely.
So they mentioned that. So Chris, what's one of the things that you invested in?
Okay. So I have invested, it's a promissory note. Those are, to me, that was a really easy step to kind of go into. It's simple terms, really easy to kind of read through. I like that one. I get interest payments paid back monthly to my account. I can always just go back onto the portal and check the status of it. That's one of my easy ones I like looking at. I do have another one with it, which is stock. We don't hold all stocks in our company, but we do hold like common and preferred stock. So I do have preferred stock in my account right now. I'm waiting for that one to hit big.
Me and Christina are in the same one.
Yeah, and then I started mine a little bit later than them, so I didn't get on that promissory note wagon. However, I do private money lending, so I work with other real estate investors, typically here in my area of Las Vegas, and I lend money. So that's kind of what I do in my account. So I have a Roth, and it just grows for me tax-free.
Yeah, I have a Roth too.
I do too.
Yeah.
It works for us. Horizon still provides us a normal 401k, but working here, we get to learn how to invest in an alternative fashion.
Yeah, we get to see all the things that you're doing and go, ooh, this is pretty cool. This is nice.
Absolutely.
And it's funny, going through the chat, I saw a lot of names that I've actually gone through your paperwork and I've seen what kind of things you're investing in. I get the chance to go through all the I've talked to some of you guys. You probably don't know it's me, but I've talked to some of you guys, which is nice.
Yeah, we definitely start seeing the repetitive names on the active clients when you guys are making a lot of investments, which it's fantastic. You're taking full advantage of what a self-directed account is for. So congratulations, pat yourself on the back, because that's absolutely what it's intended for. I guess moving along here real quick. There were questions about the property. This is from Rebecca. So if anyone's still following along, are you able to also use hard money lenders to fund as well as a non-recourse lender? So a hard money lender, that's kind of your IRA taking on debt, isn't that, Chris? So how does that kind of get handled? Because your IRA is supposed to make money. So can it take debt?
Well, yeah. It's just like instead of using a bank, you're going to use a hard money lender. So same thing, and you can most definitely do that. And I see it all the time. You have someone who's going to give you a better interest rate, then yeah, go for it. Use those people. We're still going to ask for the same type of documentation. We're just going to see a different type of lender to it. So, and if you're going to have to pay them back at some point. So just like a mortgage payment with a bill pay request form, you would submit that information to us and we'd make those payments for you out of your account.
Let's see here. Christopher asked, I have a self-directed IRA with checkbook control at my bank. I have funds that have been sitting for 2 years. Is there anything I need to look out for with regard to accounting, taxes during this time that I have not done anything with those funds? Or is it best to deal with that when I actually fund a deal? So Christopher, so if you've moved that money from your Horizon account to your bank account for your LLC and it's just sitting there, then that's technically fine. The only thing that you do want to kind of keep in mind is, like we mentioned a little while ago, we do have a fair market valuation. It's an annual reporting that you want to do because we have to report everything to the IRS. So just keep that in mind. Once that email does send out, it'll have all the information on how that fair market valuation needs to be completed. So for you in this situation, if you don't have any investments and all your money is just sitting with your bank, then that's fine. We're just going to ask you for that fair market evaluation sheet, along with maybe like a bank statement showing that the money that we sent out is at that bank account. If the values change, then we'll just adjust that value in your Horizon Trust portal to reflect what you are telling us you have. So that way they match. And that way the IRS has an accurate reporting, because maybe you're paying fees here at Horizon or fees with your bank, whatever the case may be. So even though you haven't done anything, maybe there's a maintenance fee that you're paying with your bank. So even though maybe we sent out 100,000, maybe you lost like $1,000 and just fees. And I don't know, I just made that number up. Don't quote me on if it's 1,000, but I was just using that as an example. Let's see. Jay Finnegan asked, are there any tax deductions against ordinary income with checkbook LLCs owned by a Horizon IRA for real estate investing? This is a big one, Jay. We get this question quite a bit. So Kelsey, I think you're the one that kind of understands this the best. If not, I do apologize, but are you able to kind of help here?
Yeah, so there wouldn't be any tax deductions against anything, because at the end of the day, you're utilizing retirement-based funds. And so, I mean, you wouldn't have any deductions to list, because it's just deemed as part of the investment if you were investing in a rental property, for instance.
Yeah, perfect. There's a question on, will you send a replay? I got in late. Absolutely. Replay will actually be available because we are live streaming this to YouTube. So if you go to YouTube under Horizon Herline, so it's kind of our YouTube live where we kind of stream all of these webinars, you'll be able to watch it immediately after. If not, we'll actually send out an email with the recording afterwards as well that you can replay it. But if you want to go in immediately after, you're able to watch it there. Mark wants to add an individual to his contact list. Can we get contact info? Mark, not 100% sure what you mean by that. Go ahead and send us a direct message with a little bit more details, and we'll try to take a look at that and kind of see what you mean by that. Scott is asking, can you explain what a PPM is? Chris,
That's a me question.
for you.
All right, a PPM is a private placement memorandum. To me, simply, I would think of a PPM as, let's see, I would say real estate, somewhat like a real estate, and maybe a promissory note plus stock had a baby. It's a lot of things. All right, so a little bit more details. I'll give you an example. A lot of times it's, say there's like a strip mall, there's, or a bunch of real estate buildings that need to be purchased and funded. So it's one or a company, an LLC that comes together and grabs a bunch of people with the funds that they need to fund this investment, to build these properties. And then you, in turn, as the investor, gets a portion of this investment. It's usually price per share. So that's why I say it's kind of like stock as well. So you will get dividends, I guess, based on the amount of shares that you're purchasing. So it's usually on a bigger scale of real estate, not necessarily one individual property, but usually multiple properties together. So it's kind of a mixture of everything, but those are really cool ones because I've seen like really big names with companies that they just need help to build it all together in, like I said, like in a strip mall sometimes, not always, but or apartments. It could be anything like that, but it's usually real estate on a bigger scale that they needed a lot of funding to assist them in getting it off the ground. Did that help?
It definitely helped for me. That analogy of real estate and stock was had a baby.
Yeah.
That's a good way of putting it, because I definitely seen it. So I know what you're referring to because I've looked over those PPM docs as well.
Okay.
Makes sense.
Very good.
Let's see. Gina asked, what is the minimum amount you have to have in a self-directed IRA account, and how much is the annual fee? So Gina, if you want to invest, we allow you to invest all your money out into your investments. The only thing that we do require is to have a credit card on file, and that's in case your annual fee comes up and you don't have any cash in the account. We would send you an invoice or run that card a month later for that specific amount. But Kelsey, can you add more so on like maybe what the minimum is to open an IRA and like what that annual looks like?
Yeah, we don't really require a minimum, if we're being quite honest, because we can set up, Roth IRAs for children, and you can do small account or small amounts a month, like $25. However, if you're funding it for yourself, we'd say at least $500. And that's only because, there's only so much that you can do if you're only putting in a small amount per month. So if you could do a bigger amount initially to get started, it would be more beneficial for you when you get involved in investing. And then as far as annual fee goes, it's a tiered system, and it's different for every type of account. And depending on which account type you have, it's basically a tiered system. So basically anything up to 40,000 is a flat fee of $395 annually. And then from there, it's 1% goes down to 60 basis points, down to 40, down to 30. So the more you hold with us, the cheaper your annual percentage rate is.
Yeah, so it's definitely one of those that you want to consider. And while we do have this promotion of the buy one, get one for yourself or your child, like Kelsey mentioned, if you are putting maybe like $25 aside, you still kind of want to figure out a way to make that money continue to grow, because once that annual fee does come up, all that monthly contribution that you've been making is going to go away. So you want to kind of make sure that you're balancing it, that it makes sense that you're not just putting money away so that in a year when the annual fee does come up, it's all gone. You definitely don't want that, which is why kind of 500 is the rough number that we like to say, because it gives you a year to try to grow that in whatever way you find most comfortable, whether it's real estate, private money lending, stocks, whatever the case may be. We want you to succeed. So that's kind of the situation there. let's see. Larry and Pam asked, is there a value in doing your taxes before December 31st this year? Or when is the business filing due to complete taxes? So if that one's referring more to 401ks, right? I was like, I feel like business filing would be related to the 401ks. You have until the tax filing deadline for entities, which I believe is, trying to remember correctly. Is it?
Businesses is in October.
It's in October,
If
correct?
they file an extension.
If they file, yeah. So you definitely want to look into all of that, and you're able to contribute to your account for the previous year up until the tax deadline of whichever is the tax deadline, whether it's a business tax deadline or if it's just for myself to put into my own Roth IRA, then it's to put it into up until April when I have to file my taxes with the IRS. Let's see. Larry, I saw your next question on rolling over your funds. I've actually pinged my team already. So we're going to look into that and give you a call and connect with you to kind of check on that. Let's see. Aaron. Can you use your own SDIRA to pay off a rental house that is in your LLC's name? So we'll define that as, I guess, there's no real clarity on that question. So we're going to split that into two. If the LLC is yours, that you are the owner of it, then the answer would be no. If the LLC is owned by your IRA, then the answer would be yes, because you can move more money from your Horizon Trust SDIRA to your LLC, which then allows you to pay off the rental house. So it's based on which scenario you're going for, Aaron. That's what you kind of want to consider. Again, SDIRAs, they are a retirement account, so you can't personally benefit from it at this time. And that's what Chris was kind of referring to earlier, where it's that linear descent. You are a part of that linear line where you are disqualified from using that money, that investment, or anything, along with your parents, grandparents, children, grandchildren, and even stepchildren count in that as well. So that's just something that you want to keep in mind. So just kind of think about that one. And then I'm going to do this one as the last question, because unfortunately our time here is up. Just remember, everyone, I'll drop that link again, where if you do want to book a call with our team, it'll be right there at the bottom, so you guys can schedule time. So unfortunately, we didn't get to a lot of these questions. You can watch the replay on our YouTube, Horizon Herline. We do have that promo right now, buy one, get one, available to everyone. But it is when you open a new account, we'll give you a new account for your child. So we definitely want to help you out with that situation. And it's pretty much, we want to help your kids grow their retirement, because the younger generation, which we're kind of a part of, don't really think about their retirement all too much, because they're like, retirement's years away. It is years away, but compounding interest is definitely something you want to keep in mind. And it's not something that at least I often thought about until I started working within this industry and learning all of this and learning, wow, what a difference 10 years makes to your investment. Now imagine your child's retirement account by the time they're of age to retire. So it's definitely something that we wanted to offer during the holiday season. And I had a question and then I lost it. So actually, since I did lose it, I was like, I think we'll just wrap up right there. So I do apologize. I didn't get to that last question, like I mentioned. But Chris, Kelsey, thank you so much for joining and helping me out with all these questions. Any closing thoughts that you have for today?
No, I think you did a great job summarizing and getting all those questions going through and answered. And Kelsey, you did awesome. And hope to see you guys in the next time. Thank you, guys.
Sounds good. Thanks, Chris.
Thanks, Chris. Thanks, everyone. We'll catch you on the next one.